What's going on, everybody? How's it going? Welcome, welcome. My name is Gven Sariol, for those of you who don't know, and you're just meeting me for the first time. What's up, Drew? And I am the owner of Arcrypto Educational. We teach cryptocurrency, we teach DeFi. A lot of you will learn tonight what DeFi is all about. I'm waiting for Mike to chime in here any second. I'm going to move him over to panelists and we'll get this party started. So where are you guys from? Usually I like to start these to getting to know where everybody is from here. So we got some Michigan, LA, Houston, Kentucky, Florida, Minnesota, LA, California, Maryland, South Africa, whoa, Michigan, UK, Connecticut, Ohio, New York, Brooklyn, Seattle. Cool. Awesome. Seems like there's a very diverse crowd from all over the U.S. Very cool. Mount Shaw. Oh, Panama. Wait, what? Oh, Shaw. What's up? I know Shaw. Panama. Awesome. Very cool. Yeah, I'm in Panama, and I met up with Mike here, and we actually we got him set up with learning some DeFi, learning how to invest. One, I want to teach you how to invest, not trade. In my opinion, trading is a little bit of a tougher thing. It's like trying to plug a bunch of holes in a sinking ship. There's people that are good at it. I'm not going to say that there's people that are not good at it, but I'm a long-term investor and I like being the bank, and that's what I'm going to show y'all tonight. Let's see here. Let me see. Where's Mike? I think Mike's still waiting to come in. What's up, Jordan? Oh, Denver, Colorado. I think I know Fett. Denver, Colorado. I love Denver. I used to live in Denver for a few years, and I absolutely loved it. Let's see again. Let me just check up, see where Mike's at. We usually get the party started after a few minutes here, but give me one sec. Let's see if I can get this over to him, and we'll get this party started. So how many of you all, let me probe some questions. Rialto. Oh man, my dad used to have a ranch out in Rialto. So where are you all in your crypto journey? Like, has anybody here been in crypto? Like, type it in the chat. I'm really curious to see if anybody's bought crypto before. XRP for the win. Art Gonzalez has XRP and H bar. Yes, ooh, a lot of XRP people. A lot of XRP people. There's Mike. Cool. I trade crypto. Nope, just holding. Anybody in DeFi? Like actually in DeFi? Mike, you're on mute. So let's see. Aave. All right, some people know. Never heard of DeFi. Avalanche is DeFi. Yeah, Tron, ADA. Planning to 1 to 3 years in Bitcoin. All right. Diversified portfolio. Awesome. Has anybody looked into tokenized real estate? Meaning real estate on the blockchain. Let's see. Ooh, somebody got burned from FTX. Art, do I know? I think I know you, Art. I think I know Art. Art Gonzalez sounds really familiar. But there's probably a lot of Art Gonzalez's. There's probably heard of it. Never heard of that. All right, cool. We're going to talk a little bit about that tonight. We're going to talk about tokenized real estate. We're going to talk about what DeFi is. It seems like we have a pretty solid group here in terms of crypto investors. What's up, Mike? You ready for us?
Yes, sir. We don't like that many people's in here yet, right?
Let's see. Hold on.
Or
Is it
just a
is it
couple
me?
hundred.
Yeah, I can't hear. Hold on real quick. Ah, my speaker was set to my microphone. There we go. What's up, man?
What's up, man? We're waiting on some more people, right?
We're waiting on no, it's you and me, man. It's you and me. We're ready to rock and roll when you are.
I'm talking about people watching.
Oh yeah, yeah, yeah. Yeah, we should get a few more people in here. Usually at 5 to 10 minutes past, we'll have a few extra people here. Let's talk a little bit though about your experience while we wait.
Okay.
What
Let me do one thing, and then you got my undivided attention.
All right, man, no worries, no worries. So real quick, David John and Julian Pinto and Salvador Pina, we will take questions at the end, but if you guys want, at the bottom there's a Q&A and you can ask questions there and we'll take them at the end, but we're gonna kind of go through this. Let's see. Art Gonzalez, G999. What's G999? That's I don't know what that is. All right, let's see here. I know a little bit thanks to you. Oh, nice. Anuj actually came out here. He was with Mike. Anuj works with Mike. Let's see. Hey, Ruben, what's going on? So let's see. Somebody wrote here something interesting. T. Rowe Price and Avalanche work together. I have no clue that happened. Dallas has homes being made and sold with crypto. I want to learn more. Yeah, Christian, we this is tokenized real estate is a little bit different than that. It's a little bit different than just buying in crypto and like now I own it. It's actually fractionalized real estate. It's fractionalized real estate. Thank you, Tyrone. Thank you, Tyrone. It's like meta. No, it's not like meta. We'll talk a little bit about it. It's very smooth process, Kirby. It's a very smooth process. It's pretty dope. It's pretty dope. I'm not gonna lie. Hey Don, how's it going? Let's see. Similar to Reality Mogul or Realty. My vision got off there. Just on blockchain. I'm not sure. I've never looked into Realty Mogul, but it could be fractionalized. The difference is you hold the cryptos in your crypto wallet. So like this is my crypto wallet, right? And it gets stored in here and I have possession of it. So like if it's like maybe a centralized thing like that one Realty whatever it's called, Realty Mogul, they probably hold your value on their platform. And as long as you trust them, then that's cool. But I like DeFi. I like being able to store shit under my mattress. Look, there's Mike with his
I don't trust them because they're not trustworthy, right? If you look at like all of the banks with SEC violations every year, they just look, they do these illegal things and these unethical things and just pay the fine because they got so much money. They just pay a fine and it goes away, right? These banks are shutting down and people are asked out. Like what? Can you imagine how that must feel for a bank to close, just shut down, and it happens, right? I had something that one time I had a situation where there was some fraud on one of my accounts. It wasn't a lot of money. It was caught early. However, when I called, they were like, "Oh, we see you're in this state. This is happening in this state." It was like a clone. They cloned my card somehow, right? Clearly wasn't me, right? They reversed the charges. About a week later, they sent it back, right? They took it back out. You know what they said? They said, well, they didn't clear your account out. That's not consistent with fraud. So our investigation showed it's not fraud. I'm like, wait a minute. You didn't investigate anything because it wasn't me, right? I never got my money back because they try to make me jump through hoops, like go to the police department, all of this stuff. It made me feel very insecure about my money being in the bank. That's just one thing. Then I had a whole account seized because of somebody else. It's just crazy. It's just crazy how you think that your money is safe because it's a bank. And maybe, 9 times out of 10, it is safe. But that one time is all it takes to really give somebody a horrible experience and probably ruin somebody's life. You know what I mean? So I don't trust the banks at all.
Yeah, I'm right there with you, man. Like the banks for me, I never trusted them, and look, when I was younger and just didn't understand how banking worked, I like they really took advantage of me. And the banks really take advantage of like the poorest people the most. And the reason is and I don't know if any of you
You're
know
not
this,
protected.
well, you're not protected, but at the same time, you're getting charged the most fees. Like the banks make a third of their money from overdraft withdrawals, right? Like now I have enough money in my bank accounts, I'm never overdrawn. But when I was poor, when I didn't have, two nickels to rub together to make a dime, I just got taken completely advantage of. And, in crypto, it's like you can't overdraw your account, right? You absolutely need the money there. But like, let's say, for instance, I remember one time I got overdrawn by $1. These fools wanted to charge me $30, $30 or $36. I said, hold on, time out, time out. Um, are you telling me that I was overdrawn by $1 and you're going to charge me 36x? So but for those of you who know how to do that math, but it's 3,600% that you made advancing me my $1. Like that ain't fair. And that's why so many people aren't able to get ahead in the United States and in places where they charge these overdraft fees because they make ridiculous amounts of money. And it's just like it really pisses me off because again, that's where a third of their income comes from. And it ain't coming from like guys like you and me, Mike. It ain't coming
Hold
from
on.
guys.
So I just pulled up a chart on the top 10 ways that banks make their money. Number one is interest on loans, which is shady in itself, right? And number two are fees.
Yep.
Number two,
Yep.
they want you to overdraft. You know what I mean? And
Yep.
here's the thing, like fuck those banks. We could be our own banks now. People
Yep.
don't know this, right? They don't teach these things in school. But it's interesting because I've been hearing people talk about it for the past couple of years, but no one's talked to me about it, right? So when we met in Miami, and for all my followers, we met through me and Swami, we met through Billy Carson. Billy Carson, that's my big homie. That's my OG. That's the general, so he makes very smart business moves. He advises me on certain things and it works. And the Swami right here comes highly recommended. Billy's making a lot of money with him. So I'm like, I want to make a lot of money with him too. So Swami and we spoke on the phone. We hit it off. The vibes were there because people should fill each other out before they get involved with each other business wise. That's just wise. And the energy was right. It was there. We planned a trip for me to come out and really learn. And that's what I did. And I got to say, man, like it's a lot. It's a lot to learn, but I'm very appreciative of them for taking time out and having their guys out come and educate me. We was there for about 4 days, I believe, and sat in class learning for like 8 hours a day. And it didn't feel boring or anything because it was so much information and you're learning about making money. So it's exciting. It's not like something you don't want to learn. It's something that you really want to learn. You have a sense of urgency to learn. So yeah, my experience was dope. I got a ton of notes, been going through them. It's a lot to grasp. I'm not going to lie because we crammed a lot of information in a short period of time. That's why I'm coming back to learn some more. And, I had a coaching call earlier and I was telling them that at my level, where I'm at in my life, I'm still humbling myself and learning more ways to have additional income streams and how to, put my assets in places that it's going to appreciate and it's going to benefit my family in the long run, because that's what's most important to me. You understand what I'm saying? So I gotta salute you and your team. Very thorough, very smart, very sharp guys. Um, just good people, And what I like about what you're doing, man, is like, you're in alignment we're in alignment with a lot of things. And one thing that I'm big on is being really sovereign, right? And having the ability to, hey, I'm off the grid. Nobody can find me. I love that. And decentralized financing, it just speaks to my soul, because I don't trust traditional institutions in terms of banking. They're corrupt, like literally. They're not good, and I don't trust them. And if we look at like what's going on, our current system doesn't seem like it's going to hold up much longer, right? So the dollar is losing its power throughout the world, which is not cool. This is not something that I like. People, it's interesting because people like be posting this, like stuff about Brexit and all of this stuff and the dollar being worth less. I don't know why people are excited about that. We are American, right? Most of us in here. I don't want the dollar to fall, but we can't stop what's happening. So it's best for us to diversify wherever we can and learn crypto, learn blockchain, understand it, and get involved, because the people that's going to catch on late, it might be too late. You know what I mean? And here's the thing too, like you want to be involved at the very beginning because you benefit the most. There were people buying or getting Bitcoin for free back in the day. You used to get it for free on BitTorrent sites. You know what I'm saying? My brother used to see it and didn't know what it was, right? For free in the beginning. And then it was like a few cents. You know what I'm saying? What is it, 26 grand now for one, right?
20,
So
27.5, I think.
we're in one of those time periods right now. Everybody in this chat right now, y'all understand you're in a very blessed situation. You have the opportunity to learn and to get involved with this at the very beginning in its infancy stages, because when you get in the beginning, you're good. You don't want to get in when it's already blown up and it's inflated and everybody has it. It's not going to be as valuable as when you get it right now, So this is the wave. This is the future, but you get involved. You plant your seeds. You dig your heels in right now. You don't wait until the fruit's falling already. You get it now. You plant your seeds so you can harvest it and have that fruit when it's time.
100%. 100%. And, like kind of going back to what you were talking about, like the institutions, like, I really, and I'm going to show you all a little bit about how institutions and how banks work tonight in the presentation, because I think it's really important that you see how these banks make money and how like really secure your money is, because like every investment has a risk to it. And a lot of banks over leverage themselves into a particular investment. And that's why we saw so many banks fall this year. And I'm gonna show you all the data. But yeah, I mean, I'm right there with you, Mike, and that's why I did like basically give up my old job, almost 5 years ago, and I was making mid six figures, not bad, chilling for the most part. And I was like, no, man, this is not gonna last for very much longer. Like all of these financial institutions are going to get severely disrupted by crypto. And I had that business, and then I had my crypto business where I was educating. But then I ended up leaving it because like most investors, I kind of like I still had my crypto, I held it, didn't sell it, but I was in the last bear market, which was 2018 through 2019. And I just, instead of learning and getting in and like, this is the time that I need to do this, I got out. And that was a lesson that I learned, right? That was a lesson that I learned. Now I got in really early in 2020, like in March of 2020, and I made a shit ton of money. I mean, I turned, $15,000, and then I dollar cost averaged about $150,000, meaning like I brought in money over time, over a 2 year span. And I turned that into like roughly around, I don't know, 2.4, 2.5. There was no calculators to look at how much you really made back then. I just got to kind of pencil it in, but that's what I turned it into. But I was serious about it. I look back now, like, and hindsight's 2020, right? But I'm like, man, if I would have just spent the time building back then, I would have been, probably in the 20 or 30 million. And I had some friends who stayed in crypto, they kept building, and they were in 50 million, $60 million in this last bull run. So I've tightened my belt during this bull run, or during this bear market, and I've built with my company. We didn't go anywhere. We built alongside with the other people. Like, we have our own products in-house, right? We have our own that has like managed options. We have our own platform now. There's all sorts of things that we do that we didn't have back then. But I'm like, no, man, this time I'm going to leave everybody in the dust. It's like 100 million or bust. 100 million or bust.
That's where I'm at. So when I got involved in blockchain, it was 2021, right? And well, no. Let's be. It's really 2019. And I got lucky, right? I started investing in assets just to do it. And then we had what happened? We had a bull run, right? And I came up, right? That was by accident. So after that, I was like, yo, I'm all in. So then I got involved with like NFT stuff in 2021, and I made out, like, right? So the volatility or the upside potential is so high with blockchain. It's just crazy. I made $250,000 in like 3 hours, like, no lie, right? So, and this is with me just fumbling around. This is without me having somebody like Swami, right? So now I'm like, yo, this is crazy. Like, now I have guidance. I have not just Swami, but the entire team, right, to help guide me with my investments and telling me, suggesting which assets I should be invested in, and different, things like liquidity pools, which is something that I never heard of until I came to Panama, or tokenized real estate, right? So I put together, I did my homework, right? So, with my notes and everything, I put together like basically like a breakdown on, because I'm big on DeFi. Like, I think this is the wave. Now listen, some people like whatever security they feel like they have, or the familiarity with the traditional banking, right? I like doing things on my own and being my own boss, having my own setup and situation. So what I did was I put together just like a breakdown, the pros and cons, right? Or not really pros and cons, but the comparisons between traditional banking and DeFi, right? So I'm going to go through that, and then I'm going to let Swami just take the floor, okay? This is the expert over here. All right. So these are the most important things in regards to like banking and people's finances, right? Autonomy and control, right? Remember, he showed you his wallet, right? I showed you mine. We own our assets right here. This is protected, right? This is not, your money's in a bank. When your money's in a bank, they use your money. It's not there anymore, right? They loan it out and they make money on your money. That's not fair, right? So in terms of autonomy and control, with DeFi, you have a high degree of autonomy and control. You have your own custody of your assets. You have full control over the assets without relying on any kind of intermediaries. You can personalize your transactions in the terms, right? Users can set their terms for transactions, including interest rate and lending protocols. In traditional banking, you have really very low degree of autonomy and control. There's intermediary control. Banks and financial institutions have significant control over your assets and your transactions. They have more control than you do, right? And standardized services, banks offer standardized services. So it's just there's no customization, right? Your situation may be completely different from my situation, but everything's the same. All of the bank's programs are the same, right? They don't really customize it for different customers. There's none of that, right? Now we have like innovation and flexibility. With DeFi, it's high. It's always something innovative. It's rapid innovation. Is always new financial products and services constantly being developed because it's new. DeFi protocols can easily integrate with each other, creating a more flexible and interconnected financial ecosystem. With traditional banking, it's a lot slower to adapt new technologies. Like they're going to try to adapt tokenization, but it's going to take a long time. We want to get in on this before that, okay? Before they come and ruin the party or just, mess up the party. Banks are slow at adapting new technologies due to regulatory constraints and legal systems. So with banking, it's like the government's involved and the regulations is crazy. So they can't, let's say there's something that's broken in the system, which there's a lot, right? They can't just change it. Like the logical thing would be to change it, but they can't do that because it's red tape, it's red tape, it's red tape. It's so many stages and steps. It'll take forever to change, right? Whereas with DeFi, that shit happens instantly. Now let's talk about transparency. To me, that's the most important, right? Transparency. With DeFi, it's a high degree, right? It's open source, right? So all the platforms are open source, allowing more community scrutiny and transparency in all the operations. It's public ledgers. Transactions are recorded on a public ledger, enhancing transparency and the ability for it to be audited. In traditional banking is very low. There's closed systems, what they operate on, and the transparency is very limited in their operations. They have private ledgers, so transaction details are recorded on private ledgers, which we don't have access to. We can't even see it. With DeFi, you can see everything, right? So things have to be fair. With private banking, you don't see it. It's crazy. They're able to do this for so long because there was no blockchain. There was no, competition breeds innovation. When there's no competition, there's just one system. They just move, they do exactly what they want to do, right? And they never get better. So things are changing now. Now let's talk about security. With DeFi, you have smart contracts, which, listen, people can try to hack, right? Swami, you can get more into that, right? But it's less likely to happen with DeFi, especially with the fact that you control your assets. You have it, right? And you're responsible for your shit too. You know what I'm saying? Which I think that's how it should be. Users are responsible for the security of their own assets, including safeguarding private keys. Let's see, potential for high returns. Now with DeFi, that's a high degree. There's yield farming and staking. There's all these things that I just learned about. DeFi offers innovative investment opportunities, yield farming, staking, liquidity pools. It goes on and on and on, right? With the liquidity mining, it's just so many different protocols. Whereas traditional bankings is just a low degree of that. They offer really low interest rates on savings and fixed deposits. It's like, and now with inflation, the inflation is happening at a faster rate than what you will earn in interest. So you're not making any money. You know what I'm saying? Very limited investment opportunities. You got to have excellent credit, a whole lot of money sitting somewhere. It's just not realistic for the average everyday person to really get ahead with the way that things are set up now. Now, I'm not saying that they can't, right? You can, right? But it takes a lot of wherewithal. It takes a lot of like studying and figuring things out. And you're just behind the cue ball. With DeFi right now, you guys will be early adopters, and y'all will benefit the most. We will benefit the most. I'm going to benefit the most because this is really changed. this really changed my perspective on a lot of things and changed like what my life is going to look like in the next few months or a year or so, because I'm like, I want to sit still and work on this and do this, you know? Glenn and I was talking earlier, like, yo, I might even just come to Panama for a few months and just really get way more educated in this and just, you know, start moving my assets into this DeFi space, like mostly all of them, you know what I mean? So I have money now, like my money does nothing for me in the bank, like literally zero, anything, you know what I'm saying? So having money in the bank is a liability. They don't even insure all my money. You know what I mean? So they insure up to 100 grand. I'd rather just have it in the safe at home, you know? But yeah, so I could go on for days and days and days. But Swami, you are the expert at this. I appreciate you for hosting this. And I would really like for you to break this down to my people in a very digestible way, right? One thing about banks, they talk over your head. Like, you know, they're talking all these technical terms. They talk like they're talking to their peers. People need to understand this stuff so they know, so they have confidence in what they're getting themselves into. So break it down, sir. You have the floor.
All right, brother. Thank you. Thank you. And guys, gals, I want to tip. This is your community, Mike, so they know damn well about you. But let me say this: Mike is a very, very wise man, and let me say this: he's very much like me. Like, I may come off smart because I just know this stuff so freaking well, right? But Mike is like this guy where he's like his smart comes from putting his nose to the grindstone, taking notes. Like while I was there, like I'm thinking like, man, is Mike even paying attention? Because he's just typing all this stuff. And then like I go back and see what, and he's got like a notepad like this. So like take a page out of Mike's book. All right. Mike is where he's at because he works hard. Therefore, he is smart. He and I talked about that. I'm like, Mike, you're smart, man. You're like as smart as they come, bro. Like, and we're not Einsteins, all right, but we'll grind until we know enough that we can become that, right? And that's what we really teach in my group. All right, so I want to give Mike a quick shout out for that because it's definitely y'all need to take a page out of his book for sure. Now, let me show you something that I saw today that I think is going to be really interesting, okay? Talking about banks before we get started. This is from the Bank of International Settlements. This is today. All right, this is today. And I want to show you all what kind of clowns we're dealing with. All right? Because they're about to really start messing with some people. And if you've got your bank, this is the bank of banks. This is the top bank. This is the bank of central banks. All right. If you've ever heard of the Bank of International Settlements. Now let's take a look at this. Hopefully everybody can hear.
What we have seen so far in terms of market disruptions or market stress has been associated primarily with the materialization of interest rate risk. But the next leg and the question is not so much whether it will take place, but how intense it's going to be, is the materialization of credit losses. And that's basically what's related to the credit cycle and the weakening in economic activity. And so at that point, the question is going to be how resilient the overall financial system is going to be in order to absorb those losses, and particularly how large and persistent those losses are going to be.
Previous reports, you've warned us about the property market issues and it potentially being one of the next shoe to drops. That has seemed to have gained a little bit more traction in recent months. What's your latest view on that risk ultimately?
Very briefly, just a couple of points. Let me sort of make a distinction between the commercial real estate segment and the housing market. Commercial real estate, that's a sector which is facing headwinds both from a structural and cyclical perspective. And we I think that conditions are likely to deteriorate further from where we are. And we could see some strains both among financial banks as well as non-banks. As regards the housing market, something which has been puzzling, at least for us, but I guess not only for us, is the fact that in quite a number of countries around the world, what we have seen is that lately house prices have actually stabilized or indeed started going up again. And then whenever that happens in a number of countries, the question is, well, what's going on? Especially what's going on at a time when the economy is weakening. So this is rather unusual. Now, of course, you can have many explanations that apply to individual countries, and I've heard quite a number of them. But the phenomenon is so general and is happening very much at the same time across borders that suggests that some common forces are at work. Now, exactly what those common forces are, or at least what the relevance of them is unclear. Now, some of them are structural, in which case they provide some sort of comfort. For example, I think one can argue convincingly to some extent that what we have seen post-COVID is a fundamental change in preferences with people asking for more space because of the working from home. Another aspect, however, is more conjunctural, and I think it's worth reflecting on because it ties back to what I said at the beginning. And it is the fact that financial markets are seeing that the interest rate cycle, the monetary policy, the peak in monetary policy tightening has been reached. And this goes back to the risks that I mentioned at the beginning. That could well be the case, but the risk that inflation might turn out to be more stubborn than expected is something that we should not rule out. And if there is a fundamental common factor behind all the types of vulnerabilities that we see these days, is that they are, to a large extent, the legacy of a period of very low interest rates that lasted very long. And therefore, business models, trading strategies that were predicated on that assumption are particularly vulnerable to current.
All right, so let me kind of shore this up for you here, because this guy says something, and this guy is the head banker of all banks. All right. And he's essentially telling you right now that there is headwinds coming because of yo-yo type interest rates. All right. So they're janking the interest rates up and down and all this stuff. They're printing too much money. They've got credit risk. All right. They've got credit risk. And what is credit risk? So credit risk is like people have over leveraged themselves. All right. And this is going to be potentially disastrous. All right. And when this credit risk comes crashing down, Mike, you're old enough. You lived through 2008. 2008 was devastating, right? This may make 2008 look like, the dress rehearsal, because now our debt is much higher. Our debt is way higher. All right. Our debt is way higher. And we've got some major things. And this is why we want to talk about this, because in my opinion, DeFi and tokenized real estate, you actually heard this guy right here said, this real estate market is defying us, the residential. Why? Because nobody wants to go to an office anymore. We just leased an office, but we're not going to be in there all day. Like, I want more space at home for my podcast studio, for all these things. I want more space at home so I can work, so my daughter and my wife don't hear me screaming, right? Like right in the other room. That's really what people want. And so we're going to get into this. So the presentation tonight is called "What Happens to Your Money If the Banks Collapse?" And could tokenized real estate be your solution to safeguard against the banks? So you guys know, me and Mike spent 5 days together here in Panama. It was a great time. I'm really stoked to have gotten to know Mike on a deeper level. We definitely jived. His boy Anush also came out. Shout out to Anush. He was a great person as well. And we got him learning crypto and DeFi. And we got to show them all around town, all around Panama. By the way, Mike, did you put up a poll? You put up a poll on YouTube that asked, like the next emerging city or something like that. And Panama is on there. And surprisingly, at least when I saw it, Panama received the least amount of votes. I voted Panama, obviously, because I live here. But it's like, did that change?
Well, people, it's not on the. No one, people not talking about it yet, like Dubai or whatever, right? But it's happening, and this is the beauty of it. Like, I like to get in before everything is all crazy. You know what I'm saying?
100%.
Because the
100%.
people that do that first benefit the most. So
Yeah.
I don't want nobody to know about it yet. You know what I
Yeah.
mean?
You're right. You're right. Cool. Great perspective. Mike always brings the best perspective, man. That's why he's the alpha dog. All right. So a little bit about me. All right. Just real quick, because you guys don't know me. Some of you do, but some of you don't. So I'm an ex-financial advisor. I actually used to work as a financial advisor at AXA Advisor from 2008 to 2009, which was when the recession started. I was still one of the top salespeople, but I couldn't make enough money back then. I couldn't make enough money. I'm the ex-founder of the largest cycling personal injury law firm in the United States. I used to be pretty avid cyclist and gained a lot of notoriety in that the circle of cycling and like kind of pro cycling, by the way, and really built a huge following there. I started investing in crypto mid 2017. Did really well. I turned like 40 grand into 250 grand, and I dollar cost average. I brought that money in from July of 2017 to June of 2017 to September of 2017. I put 10 grand in each month, and I turned that into 250,000, cashed out about 100,000, and decided I wanted to start teaching people crypto in January of 2018. And so I did. Unfortunately, the universe, God, whatever you believe in, had a different plan for me. And I was diagnosed with stage 2B colon cancer. So I kind of retreated. I focused on my healing for about 5-6 months. I stopped teaching crypto up until 2020. But then I was able to, I actually moved because I didn't go through the chemotherapy or any of that stuff for my colon cancer. I ended up moving to Russia, and I started working with a Russian shaman doctor out there, which really helped. And that was around March of 2020, which was when COVID started. And I started looking back into the crypto, and I was like, wait a second, this shit's about to light up, like for real. And I remember, man, I would stay up. That first night I was up from 12 p.m. until 4 a.m. in the morning researching. And I was just seeing all these yields. And, you know, it started off with just like 5% a year. And I was like blown away. Oh my gosh, I can make 5% a year on my crypto. And then it went up to 10% and then 20%. And I found at that time, the maximum was 50% on a crypto called SNX, which I'm still invested in because I'm really bullish on it. And I was able to learn these things, and I got more and more into DeFi leading up to what's called DeFi summer. And I got into DeFi when it first started. There was nobody else there. So I learned a lot of cool lessons, and I learned a lot of hard lessons. All right. But I was able to create a 6-figure passive income by becoming my own bank. And I learned this stuff the good old fashioned way, the hard way. All right. There was nobody guiding me because nobody knew how to do it. Even like certain influencers that I would follow back then, like they didn't even know if they were doing it right. And I would reach out to them and be like, no, you're doing it all wrong, or all this stuff. Like, but we were just trying to figure it out. But I was able to maintain the 3 freedoms. And this is really important. Financial freedom. Obviously, you need to make enough money to do the things you want. Time freedom, which means like you actually have time to do the things you want. And location freedom. You have the time and the money to be where you want to be. All right. And so in 2000, yeah.
Gven, could you share the full screen?
Oh, is it not full screen? Oh, shoot.
We see your presenter mode.
Oh, sorry. There we go. Can you guys see that?
Yes.
Full screen. All right, cool. So I ended up going from, a millionaire in 2017, okay, because I was focused on my health and all this stuff, but I was going through a divorce at the time. Like it was a really shitty time in my life, to a 15,000aire. All right. So I went from like, I had $1 million to $15,000 living in Russia in like a dump. All right. In 2020, like literally in the basement of a 25-year-old kid's, but you don't want to live in that. All right. But I was sleeping on his couch. And I was able to turn that 15,000 to roughly around $33,000 per month at one point in time. But not only that, my portfolio exploded. One month I made $500,000. Now, I should say my portfolio went up by $500,000 just in 1 month alone by the things that I started doing in DeFi. Now, a little background on my company. All right. We started teaching crypto in January of 2018. We started teaching DeFi in summer of 2020. We started teaching how people can become their own banks. All right. And to say the least, we have literally seen the good, the bad, and the ugly. All right. And each bear market that I've been in, I have learned so many lessons, and I'm grateful for those lessons. All right. Even when I lost, I was like, oh man, this is awesome. And I've had guys, gals, I've had everything happen to me. Ponzi schemes. I've had things stolen from me. I've had, rug pulls, all this stuff. But in the end, it made me a way better educator and a way better investor. And that's why, like, now I have that tunnel vision, and I'm going in with some money, because even though the crypto market went down and my portfolio is not worth that 2.5 million that it was, I have a heck of a lot more ready to rock and roll this time around because I was smart. All right. And I still learned some lessons this time around. Don't get me wrong. All right. But now I have that tunnel vision and I have that wisdom. All right. I have that wisdom. Now, what's going on with the traditional banking system? Now, Muhammad Gandhi talks about this saying, and I love this, all right, because it's so relevant to what's going on with crypto right now. First, they ignore you, then they laugh at you, then they fight you, then you win. Right now in crypto in the US, and the majority of you from the US, because I saw there in the chat, all right, these guys, these evil motherfuckers, excuse my French. If you got kids, cover their ears, because I am not fond of these guys. All right. These evil guys have started something called Operation Choke Point 2.0. And the cool thing is they're not really winning. All right. The cool thing is they're not really winning. And I saw a lot of you in XRP, and my hat is off to the XRP community because you guys really took the fight to the SEC. But these guys have basically created a vacuum to try to cut off the entry points into crypto using the banking system as a weapon. And they did this back in the day with the internet casinos and the porn sites and the gun sites and all this stuff. They did the same exact thing to them. They started cutting off all of their banking. All right. The marijuana, the guys that were doing the medicinal marijuana, all of that, they started cutting off all their banking and making it illegal to do it. Now, luckily, they haven't been able to cut off all the choke points, and the crypto companies have learned new ways around it. Like the crypto company, the crypto community, I should say, is a resilient one. Like, we build and we find ways around it, and we find ways to do things bigger, better, faster. Now, that doesn't mean it doesn't come without, peril. We've had things like Celsius. We've had things like FTX. We've had things like, Terra Luna, all these things that were not so good. But every time we learn lessons, just like back when I got in 2017, 2018, like, you would hear about all these centralized exchanges getting hacked. Like Binance really never did, but KuCoin, OKX, all these exchanges would get drained by hackers. Now you never hear about it because the security is built there and it's all set up correctly. Well, that's what's going on with DeFi, and it just keeps getting better and better. But we have this guy, I call him, Dirty Gary. Feel free to just make fun of this guy. And I'm not like that. I don't like making fun of people, but feel free to make fun of this guy because he is just a dick. All right. He's a dick. He's one of the main regulators attacking right now. Now I'm going to go through the next slides relatively quick because they're big. And the point of the next slides is I want to just show you how much these guys are fighting us right now in the crypto sphere. Now, it's not happening anywhere else in the world. You go to the UK, they've got crypto regulations coming up. They're like, no, we're embracing crypto. You go to Hong Kong, they're like, yeah, no, we're embracing crypto. You go to Japan, they're like, no, we're embracing crypto. You go to Russia, even if you hate Russia, they're like, yeah, we're embracing crypto. You go to Singapore, they're like, yeah, we're embracing crypto. You go to Dubai, they're like, yeah, we're embracing crypto. You come here to Panama, they're like, yeah, we're embracing crypto. Everywhere else in the world is embracing crypto except for the US. And it's because of people like this and Elizabeth Warren. And I'm not a left-wing, right-wing. I'm like left-wing, right-wing, like same bird, all right, in my opinion, all right? But the left-wing right now is going after crypto. And the right-wing now is trying to associate with crypto. They're like super pro-crypto, left-wing, over crypto. They hate crypto. And these are the attacks that are going down, all right? You can see the attacks since December and in January. And, and if you want to slow this down, we're going to send a recording to everybody. These guys have been going after Coinbase and Binance, and, they're going after all these things. Paxos, which is they do stable coins. They do gold on the blockchain, like all these real relevant things. They're going after other exchanges, KuCoin. They're going after Impact Theory, the NFT project, which is totally lame because it wasn't even tied to profits or anything. They're going after Bittrex. They're going after all of these things. They're trying to cut off the banking system. Now, they started doing this, but here's the problem. Then something broke outside of crypto. So they started going after all these crypto banks that were super friendly with crypto. And then they were like, oh shit, we just broke something. And what did they break? Silicon Valley Bank. Now, they went after Silvergate, which was a crypto bank. They went after Signature Bank, which is a crypto bank. But Silicon Valley Bank was where the real ugliness came out. And these two crypto banks, one of them, they just took it over. All right. This is like some Atlas Shrugged shit right here, where they came in and they were like, oh no, you're just involved with crypto. We're taking you over. They literally walked in and took it over. All right. But Silicon Valley Bank, it had very little to do with crypto, but it had a lot to do with VC investment in Silicon Valley, which is where a lot of the technology outside of crypto is obviously built in the United States and developed in the United States. And so they ended up crashing Silicon Valley Bank, and they were like, oh crap, we need to be really careful. All right. Why? Because Mike was saying, they can only insure up to $250,000 from the FDIC. All right. So they can only insure up to $250,000 from the FDIC. And the majority of the banks in Silicon Valley Bank were way over that. We're way over that. The majority of the bank accounts were way over that. So let's talk a little bit about how they got there, though. All right. How did they get there? And it all starts with fractional reserve banking. So here's the way it works. And this is what Mike was talking about earlier about banks. All right. Fractional reserve banking takes your money. So you actually deposit $2,000 into the bank. Well, the law allows the institution to invest up to it's actually 97%. This is an older slide. I don't know why they didn't, but up to 97% of your money, which means that they can take your money, all right, which is your money, right? So why wouldn't you make the profits off the money you're depositing? I never got that. And that's the real thing that grabbed my attention immediately when DeFi first came out. And they're able to loan that $2,000. Out of that 2,000, they're able to loan $1,800 to other people. And then that person takes that $1,800, puts it in her bank account, and now they're able to loan 90% of that. And then they loan that out to the next person, and they put it into their bank account, and they loan that money out, and so on and so forth. And that, as long as that spigot keeps coming in, you depositing that money, they can keep doing that. But here's the thing, and here's where they really effed up. And there's like 700 and some banks, guys and gals, right now that are in the same position as Silicon Valley Bank, as some of these other banks, First Republican Bank or something like that. I have it here in the next few slides. But they're in the same boat. 700 and some regional banks. All right. Now, let's talk about what a short-term T-bill is. A short-term T-bill is a treasury bill, is a short-term U.S. government debt obligation backed by the Treasury Department with a maturity of 1 year or less. So, like, if I invest in a 1 year T-bill, I lock up that money for 1 year. Now, treasury bills are usually sold in denominations of $1,000. However, some can reach a maximum denomination of $5 million in non-competitive bids. So you can like invest up to $5 million in per one bond batch. What is a long-term T-bill? Long-term treasury bonds are U.S. government bonds that have maturities longer than 10 years. Now, think of that. Think of this. You actually lock up your money for 10 years. Remember that. Remember that. So when you purchase a long-term treasury bond, you're basically agreeing to loan money to the federal government for an agreed upon period until the bond reaches maturity for an interest rate. So let's take a look here at the 10-year T-bill and what's happened with the pricing of it. So like we've seen, like back in the 80s, man, it went through the roof. 16%. Now, times were way different. We didn't have the debt that we have now. All right. We didn't have the debt. Our dollar was still very supreme because we had the petrodollar. But over time, these interest rates started to come down and down and down until we got to like the 2000s where they came really down. And it helped because that was what really stirred that real estate boom from 2002 to 2008. And I lived through that. I bought some real estate, not a lot. But check this out. We had the coronavirus happen. All right. And they brought the interest rates to damn near negative. All right. Interest rates were 0.05%. And this is the low. I took a screenshot of it. 0.05%. This is where the low was. All right. So this is what they were paying in T-bills. 0.5%. Some of them were able to get a little bit more. In April 6th of 2020, they earned a whopping, the banks did, not you, the banks did a whopping 0.73%. But they had billions and billions and billions of dollars. And they knew we can invest 90% of that money. We can invest 90% of that money. Now, this chart is from, I think this goes until April of this year. No, March. Sorry, this was March of this year. Okay, this chart is March of this year. But interest rates have actually gone up to 5.5%. All right. That's an increase of 1,000% in the raise. So from 10,000%, because we got down to 0.05. So some of these banks were like, let's get into these 10 years because they are the most secure investments in the world. Wrong. So what happened? These 10-year T-bills, if I want to get out, because let's say my customer says, I want my money back, or a slew of them, a ton of them, because the banks basically say, they're only going to need a little bit at a time. They're only going to need a little bit. They're never going to come back and withdraw their money. There's no way. There's no way they're going to do that, right? Wrong. So here's the way it works. Let's say you have $100,000. All right. Lisa C, she's one of our students. She deposits $1 million, $1 million bucks. The bank can put up to $900,000 in T-bills. And they keep $100,000 in reserves in cash. All right. Now, let's say the interest rate changes to 3.74. And Lisa's like, wait, Silicon Valley Bank is only giving me 0.01%. That's crazy. I'm not even keeping up with inflation, which at this point in time, inflation was at like 7 or 8% when I took this screenshot. So now the bank owes Lisa $1 million, right? But bank only has $100,000. Now, the bank needs to come up with this extra 900,000 because Lisa's like, give me my money, yo. Now, they give Lisa her 100,000, which they have, but here's where the problem begins. See this calculation? There's a T-bill output. So if I want to sell my T-bill, I calculated it in this calculator at the rate that it was back then, at the 0.75%, and I want to get out of it today because the yield is 3.74. I'm getting 5 instead of 900,000. At that point in time, I was getting $566,000 back to sell it like that because I needed to liquidate it to give Lisa her money. That means there's a $330,000 deficit that the bank owes. Guys, gals, this is one example of one person with $1 million in one bank. Some of these banks have hundreds of thousands customers with far more than that. And the FDIC only insures up to $250,000. Let that sink in. What would happen if the banks don't cover that? You lost all of your money, and the country would go into the greatest depression that we've ever seen. Guys, gals, I'm not lying about this stuff. I'm showing. Collapsed yet because the government front ran it, and they said like, whoa. We've got to tell. It is not economically feasible without them turning the money printer on. And if they turn on the money printer, what's going to happen to inflation? It's going to go up again. So all of your cost of goods will keep rising. And maybe this time, not at an 8% inflation, but at a hyper inflationary rate. So right now, the perfect storm is brewing, all right, in the traditional financial systems. Inflation plus banking failure is the perfect storm. And again, what happens if the Fed keeps raising rates and causes a massive banking failure? What happens if the Fed stimulates banks by injecting money back into the system? And this is exactly what is going on. And despite the attack on crypto over the last 9 months by regulators, here's what crypto has done. It's done the opposite. Look at this chart of Bitcoin. It has gone up and to the right. It has defied gravity, just like the real estate market. Why? Because people are like, I don't want to touch that trash. I don't want to touch cash. I'm losing money. If I'm not making, they say it's 2% or it's 3.87% right now for inflation. In my opinion, it's probably closer to 8% still. All right. If your money's not making at least 8% per year, you are losing money. You are losing your purchasing power. Just letting it sit in the banks. Okay. Or cash under your mattress or in your safe. All right. We're going to show you a new safe, though. A new safe. So why has it made this move? Well, because instead of people buying these T-bills, they took their power back and they started buying Bitcoin, Ethereum, other cryptos, and other assets, real estate, gold, silver, some stocks. They were like, dude, the hell with this. I'm not sticking around for this. Now, here's some more banks, all right, that are like really, really on the danger list, all right? This bank already went belly up. First Republican Bank, all right? All of these banks, not looking so good. And again, there's been reports of about 700 of these other banks, all right? Now, it's time to really pay attention because the can has run out of road to be kicked down, all right? And the question that you need to be asking yourself right now is, who do you trust? The banks and the governments who keep putting you deeper in the hole, who keep widening that class between, or that chasm between the upper class and the lower class, for you to make it harder to afford your living lifestyle? Or do you trust you? That's a big question, and I want you to really, really think about that as I'm going through the following slides, because there is light at the end of the tunnel. We just talked about the dark stuff. Let's talk about the light stuff. So it's education time. So please pay attention. Again, be like Mike. All right. Take out your notes, start writing them down, type this up. I'm going to send you a copy of this. If you want to rewatch it, do it. There's going to be some gems in here. All right. So what is decentralized finance? DeFi stands for decentralized finance. It is a new way of handling money built on technology called blockchain. It's called decentralized because it's not controlled by banks or governments, and instead it is governed by the blockchain and people all over the world. All right. And this is the key thing for me. Like, it is governed by us. Like with Bitcoin, it's governed by the miners. Like I have 2 miners all over the world. They're in two different places of the world. All right. DeFi uses something called smart contracts, which we're going to get into here in a little bit. And these are like digital agreements that automatically carry out transactions when certain conditions are met. It's open to everyone, and you don't need to go through a bank or any other middleman who's going to take those fees from you to use it. Now, why is DeFi exciting for me? Because DeFi can bring banking and financial services to people who don't have access to them. There are billions of people in the world that do not have a bank account, guys and gals. Think of them. Like, I know a lot of you in the US, you have a bank account. But think of them now having access to their own bank on their cell phone or on their computer. There's a lot of people in Africa, in Asia, in South America, Central America. They don't have bank accounts. Eastern Europe, all right? India. All of these people are now getting access to this stuff, and this is growing faster than the internet right now did. All right, growing faster than the internet. Efficiency. DeFi uses automation to make transactions faster and cheaper. Transparency. All DeFi transactions are recorded and can be seen by anyone, which helps to prevent fraud and corruption. Control. With DeFi, you have full control over your money. You don't need a bank to hold or make your decisions for you. And then the most important one for me because this is the one I like. Like all of these things are great leading up to this one. Make bank money, make institution money. You make the money that banks and institutions make. With DeFi, we have the ability to collect the fees that the banks make by providing for financial services. And I'm going to give you a breakdown of how that works here in a little bit. So what is a centralized exchange? Y'all need to understand what this is. Centralized exchanges are like traditional banks, but for cryptocurrencies. They are owned by a single company that controls the funds and makes the trades. You have to trust them to keep your money safe, just like you trust a bank. They often require you to share personal information to use their services. They usually offer a selection of popular cryptocurrencies, but not all of them. Now, if you're paying attention, all right, I want you to drop in the chat. Give me some examples of some centralized exchanges. All right. Centralizing. Yeah. John's on it, man. John was like, he had his finger on there. Coinbase. Exactly. Binance. Exactly, guys. Exactly. Yeah. Coinbase is like the most popular one. KuCoin, Robinhood, Luno. Yes. Uphold. I don't even know what Uphold is, but it sounds centralized. Robinhood. Yeah. Gemini. All right. You guys are paying attention. Thank you. Wake up, because it's going to get interesting here. All right. It's going to get interesting here. So what is a decentralized exchange? Decentralized exchanges are like a marketplace where people trade directly with each other. They are not owned by any single company. Instead, they use technology called blockchain to make the trades. You keep control of your money until you make a trade. You can use them without sharing personal information. And they can offer a wide range of cryptocurrencies, including new and less well-known ones where you can make lots of money. All right. Now, there's one guy, Mike. Mike seems like a smart guy. Mike Lapp. All right. What is a decentralized exchange? And I guarantee you 90% of the ones that are going to answer are my students. Let's see here. Let's see. Come on, students. Give me some decentralized exchanges. No, MetaMask is not a decentralized exchange. Bitcoin is not a decentralized exchange. Ledger is not a decentralized exchange. Uniswap is not a decentralized exchange. Exodus, maybe. Gold is not a decentralized exchange. An exchange is where we can trade peer-to-peer, guys. All right? Peer-to-peer. Pancake Swap, Uniswap, thank you. I've never heard of Metrics, but I think that was one of my students. So I trust him. All right. But yeah, Trader Joe, Jilly, man, Jilly, I think Jilly is an Avalanche maxi, because I think I've seen them comment on some stuff. MetFi, no, James, MetFi is not a decentralized exchange. Pancake Swap, thank you guys. All right, everybody's paying attention. Thank God. All right. So now, here's the thing. You can use these decentralized exchanges without sharing your personal information. You have full autonomy, all right, which I love, because you know what? I'm not a criminal. I pay my taxes, all right? And to be quite honest with you, the government doesn't know shit what is best for me. Ain't that right, Mike? Yeah, Mike knows. The government doesn't know shit what's best for me, nor you. And if you believe in that, say amen. I want to hear it. I want to see it. But they can also, again, offer a lot of cryptos that you'll never have access to, which I love. All right. So how do we print money in DeFi? We literally print money. All right. It's no different than the banks and the institutions do. And here's where everybody needs to pay attention. All right. This is an example of how centralized exchanges like the NASDAQ, okay, because the NASDAQ is a centralized exchange still. The only thing is, instead of selling crypto, they sell stocks. They sell securities. So the NASDAQ provides liquidity, all right? And what does that mean? What does liquidity mean? It means that they've got Apple stock so that people can sell Apple stock into cash, and people can go and buy Apple stock using cash. All right. Without those two things, you don't have a market. But here's the crazy part. The NASDAQ makes a fee every single time a trade goes through. From cash to Apple, from Apple to cash, from cash to Apple, and so on and so forth until infinity. And every single time a trade is made, on average, the NASDAQ collects a fee of anywhere between 10 and 150 bucks, depending on the size of the trade. The higher the trade, the more you're going to pay. And here's the even crazier part. The NASDAQ keeps all the fees generated. Like, they don't call Mike Rashid, they don't call the Swami and go, yo, guys, you have Apple stock and some cash? Okay, well, guess what? I have the investment of a lifetime. Put it here, and every single time somebody makes a trade, you're going to make some money. You're going to make a cut. Said no centralized exchange ever. The NASDAQ is a centralized exchange where you give them custody of your money, stocks, and your power. Now, here's some example of how much money I have made in decentralized exchanges. And now listen, guys, gals, I like talking about disclaimers because, you know, like you usually go to like your Apple disclaimers and it's like the disclaimer falls through like 30 stories down, you know, into the middle crust of the earth because it's so hard. I'm going to be very blunt with you. Very, very blunt, very straightforward. Results vary based on students' understanding of decentralized exchanges, the volume that is being traded, and the investment amount. These numbers are not guaranteed. So if you're sitting there and you're like, oh my God, the Swami told me, Mike told me that I can get guaranteed 523%, you just told yourself a lie because this is not guaranteed. And a lot of factors vary on the investments that I'm going to be talking about. Another thing, please do not take this as financial advice. I'm not your financial advisor, despite the fact I used to be one. I'm no longer one. We are not giving you financial advice. We are just merely telling you what we do and what we teach our students. You, like Mike said earlier about sovereignty, it's time to pull up our pants or skirts and become big boys and big girls and really take advantage of the knowledge that's being presented. And it might not just be me. There's other people out there giving good knowledge, but educate yourself. Don't rely on somebody else. All right. Don't rely on somebody else. So this is a liquidity pool. So like Apple and cash, think of it like this, except instead of Apple, FXS is Apple, and Ethereum, because it's the stronger cryptocurrency, is cash. And every single time a trade is made, okay, we're taking 1% in fees out from each one. And the people who contribute into these pools, okay, people who contribute into these pools are sharing this 1% that's being made. Well, based off of the amount of money that I put in at the time, and this was taken in March, all right, and the volume has gone down. Crypto right now is a bad word, which is when you want to get into crypto. You don't want to get into crypto when your Uber driver is telling you to get into crypto. All right? You don't want to get into crypto when your Uber driver is telling you, and all of mainstream media is talking about crypto. That's the last time you want to get in, because you want to know why? That's when me and Mike are selling on you. That's when we're selling on you. Same as the stock market. You don't ever want to get into a stock when all the media is talking about the stock, right? You want to get in before that. So I was earning 523% per year in that time period. And that's what it estimated had the volume kept going. Now, here's another example. And this is, by the way, no Ponzi scheme, no MLM. You could go and you could learn this on YouTube if you wanted to. but that's like dropping you in the middle of the ocean and somebody going, learn how to swim. All right. So here, another liquidity pool, ETH and USDC. USDC is what's called a stable coin. So a stable coin is backed 1-to-1 by the dollar. So it never goes further up than a dollar, or it never goes lower than a dollar. All right. So every time a trade is made, I'm earning fees from USDC to ETH, USDC, all that stuff. But the fees are lower and more competitive because there's more money in there that people will want to trade. That the first one that I showed you was more of an exotic pair. And those are the ones that I like finding, but I also like finding these ones because look, at one point in time, I was earning a projected $1,217. I'm sorry, 1,217% per year. This is how I turned $15,000 and $150,000 that I brought in over time into $2.5 million. This is how I did it. Again, no Ponzi scheme, no MLM, no referral fee, no nothing. Just straight being smarter than the average person and learning this stuff. So what is infinite crypto banking? It's the ability to print money the same way that Wall Street does using DeFi and using crypto. And here's an example of that one that I showed you, FXS ETH. I literally click this button. I sign what's called a smart contract, and boom, that money is in my wallet. And now I can send it to my crypto.com Visa card, and I can start spending it all within literally 2 or 3 minutes. 2 or 3 minutes. No lie. Or I can take this money and reinvest it wherever I want. Put it into tokenized real estate, like we're going to talk about. However, this is DeFi 1.0, but now it's time for crypto and DeFi to grow up. And everything from the stock market to real estate to commodities to art to music to gaming will be on the blockchain within the next 10 years. And if you're like, no way, Swami, that's never going to happen. Check this out. JP Morgan on its plans. The overall goal is to bring trillions with a T of dollars of assets into DeFi. Now, hang in here, guys, because I'm going to get to the juicy stuff. All right, I'm going to get here to the juicy stuff. And if you don't believe me even further, take a look at this. This is a marketplace of tokenized real estate. And this is what our marketplace looks like, this one. Okay? You can literally come in here, connect your wallet, and start buying real estate. And this particular real estate investment is in Dubai. This is not ours. This is another one. Okay? I'm sorry. This is in, where the heck is this? This is in Slovenia. That's right. They've got it valued at 541,000 euros. All right. And their payout is 6%. That's what they're estimating, 6% average APY on this. All right. And so this is the average holder. It shows the average holder is paid $77,000 for this property. Now, you don't have to do that. Each of these cryptos, you know, you can buy it for $2 or $3, $100, $1,000. And it's all on the blockchain, and it goes straight to your wallet. And the dividends that get paid go straight to your wallet. You see what I'm saying? You see what I'm saying? So if you're like, nah, crypto stuff's too risky for me, or you want to take profit into something that is not a 10-year T-bill, which could end up in ruins just like you just saw, okay, you can come here and get into real estate, which, by the way, typically real estate goes up in value. And here in Panama, it goes up in value between 7 and 8% per year. All right. So not only are you earning these dividends, but it's going up. And then also the 6% is going to go up as well, because why? Inflation. Like the Fed didn't say we want a negative inflation. They said we want to do 2% inflation, which means you're going to get a 2% raise per year on this 6%. All right. On the 6%. So over a 10-year period, it may now be 8% that you're receiving. All right. Now, here's the even cooler part. See these are cryptocurrencies. You're able to borrow against these cryptos now using this. No bank, no nothing. And I can pull up to 80% of my equity out of these coins. So if you're in a jam, you can borrow against these coins and not lose them and pay it back. If you have an investment that's juicy and you want to get into it and you want to borrow against these, you can borrow against these. Now you're going to pay an interest rate, obviously. All right. And right here, the borrow rate is 6.43%. So you need to make sure that you're getting paid more than that. But we show you how to do that in our course. I'm not going to do it here because we only have so much time. Here's another company, Goldman Sachs. Goldman Sachs saying regulators should protect crypto investors at the point of trust, meaning in the centralized exchanges, not the blockchain. So one of the biggest asset managers in the United States is saying, yeah, don't touch the blockchain. That'd be a disaster. Regulate when people are onboarding their money into crypto. And that's what's really happening. BlackRock, the largest asset manager in the world. And by GDP, so the assets under management, the third largest country in the world. Okay. Like the only countries that have more assets under management are the United States, and then second to them, China. All right. BlackRock is pushing to tokenize everything. And they're pushing for a Bitcoin ETF, which is going to do wonders for it. Now, companies with the most assets under management in the world, check this out. Look at this. BlackRock getting into crypto. They've got $9 trillion. Morgan Stanley getting into crypto. Fidelity getting into crypto. I think they have $2 trillion. Goldman Sachs getting into crypto. I can't remember how much they have. JP Morgan Chase, they're getting into crypto. Who else here? I don't know if any of these other ones, but this is out of, the top 9, 5 of them, the majority are getting into crypto. They're just starting. Guys, gals, I think between like these and like 4 others that are getting into crypto, we're talking 44 trillion with a T getting into crypto. That's called the potential for generational wealth. And this is why you don't want to miss out on learning this technology. And I'm getting to my stuff here, so do not click off because we're getting to the alpha here. This is why you don't want to miss out on this technology. Now, here's one of my students, all right? She ended up getting in with the ARC. I saved her $1.5 million because we took all of her money off of a centralized exchange into DeFi, and she was making a piddly 5% per year. I got her making over 100% per year on her cryptos. All right. And she's able to afford all sorts of things. Matt is up. I'm gonna fly through these. Matt is one of our top students. He's been around for a long time. He actually now is directly working with the ARC, but he's up like over 100% on his crypto, or 85%. Okay, that we helped him get into last year. Sean L earning 1,700%. This is now, all right? I think this was taken in May, but this is still going on. Lloyd, all right, he's making 320%. Again, this screenshot was taken very recently in May of this year. Now, let's talk about tokenized real estate. And we're almost to the end here, so hang in there with me, all right? So what are the benefits of tokenized real estate? Diversification. Tokenization allows individuals to diversify their investments across multiple properties, real estate strategies, and time periods. Liquid assets. Tokenization enables individuals to buy and sell properties like any other liquid crypto asset. Residual income. Buying tokenized fractionalized real estate allows participants in monthly residual income. Now, you can also borrow and lend against these, all right? You can borrow and lend against these, which is great, all right? Tokenization allows fluid borrowing and lending against your tokens. And the role of DeFi enables this feature allowing profit from real estate gains without selling it to buy another tokenized property. All right. I'm going to skip through a couple of these things just because I don't think that they're relevant. But this one is relevant. Backing of properties. All securities tokens are backed by the properties, and you have actual consumer protections. All right. So securities tokens offer benefits for consumers, for consumer protections, including the ability, like if you have your wallet stolen, we can now burn your tokens. All right. And reissue new tokens. And a lot of people, unless they have the right security, which we teach, all right, get burned on their security. All right. They get burned on their security. So you want to make sure that you don't get burned on your security. All right. So these are all things that we have available that we're showing people how to do on the blockchain. And it's all possible. You can get into real estate without having to invest $100,000 or $1 million. You don't have to have stellar credit. Now you click it with a click of a button. You can get into different types of real estate. Maybe you don't want to do like an Airbnb type. You want a longer term investment one. All right, you got it, right? You got it. So how do you truly build generational wealth in crypto? One, you become as decentralized as possible. Like we help Mike get, and he's like he said, Mike's already like, man, Mike's a G. He's already like, I'm going to Panama for like a month or two. We're going to get everything set up over there. Two, educate yourself. All right. Educate yourself. Three, learn how to do your own research and become your own crypto advisor. All right. So how do you truly build that generational wealth in crypto? You start earning, and so that you can start earning a really solid passive income, you want to learn DeFi and become your own bank. You want to have a plan in place. Like here's an example of my spreadsheet. I have all my cryptos here, all the risk tolerance, the APRs, all right? And this is the most important. This is the most important, guys and gals. You have to be conservative in crypto. You want to be conservative in crypto, especially right now. And you want to be patient as the market goes up over time. All right. Like a lot of people come here wanting to get rich. This is not that place. Like quick, rich quick. We're the get rich quick medium plan, not the get rich quick scheme. We're the get rich quick medium. If you give me 2 years, 3 years, I'm going to show you how to do this thing. But I need your time and I need a little bit of your attention. All right. And so I'm going to show you here. This is our DeFi generational wealth blueprint. All right. And if you want to take screenshots of this is where it gets real juicy. And by the way, if some of you are already ready, like you're like, man, I'm sold. I want to sign up. I want to become part of your group. Matt, drop the link in the chat. Drop the link in the chat so people can begin to sign up. All right. But I'm going to go into this DeFi and I'm going to go into like what we cover in our classes here just in the next few slides. So hang in there. All right. But this is the blueprint. This is the blueprint. If you can follow this, you can make lots of money. And I'm going to show you how this works. So this is the way I'm actually structuring my portfolio. 50% of my money goes into low risk investing. So real estate, or I'm talking with, Mike right now about meeting up with Tay Sweat because I really liked his dividend paying stock strategy. That I'm really into that. I want to hear more about it. I want to learn from the best. So 50% goes into the low risk investment bucket because you don't want to be degens, guys and gals. I'm telling you, you want to get rich quick. You can maybe, but you're going to lose it just as fast. I promise you, because I've done it. All right. Then 50% goes into higher risk, not like the highest risk, but higher risk investments like Bitcoin, Ethereum, and other blue chip cryptos that we're talking about at the ARC. All right. Now, here's how it works. 50% of the low risk profits, we just keep rolling it. And we're going to do that for 5 years. All right, because this is a get rich medium plan. I didn't say quick, medium. All right, so 5 years, we're going to roll this. And then 50% of the higher risk profits, we're going to take into the low risk. And then we're going to roll the rest of that 50% back into the high risk. Now, let me show you how this breaks down. And this is how we make generational wealth. So here's the potential. And I broke it down super easily for you. 50% crypto initial investment. So you're going to see you don't need a lot of money to start. $5,000 you're going to invest into crypto because that's 50%. We're starting off with 10,000. And you're going to invest an additional $250 per month. That's less than a car payment. $250 per month. That's going to be an additional $11,000 over time, over 2 years. I've done the math as to how much I made. It's way more than this in terms of percentage gains, guys and gals. I swear to you, it's insane when the market goes up. I put this conservatively because I wanted to be conservative. Let's say this only goes up by 250% during the bull run. That means this money, all right, compounded, goes up to $580,000. All right, this money compounded because I'm compounding the money, remember. Now, I'm gonna take the fees that I've earned in liquidity pools. That's gonna earn me up to $1.45 million. Now, if you have more money, this goes even higher. If you have more money, this goes even higher. All right. So what happens? What happens here? All right. And by the way, this is 250% per year, not 250% in 1 year, 250% per year, which I did more in the last bull run. All right. And had I been set up better, because remember, I stopped because of my cancer and all that stuff, I would have done way, way more than that. Now, here's what the yawn money, but this is the solid money, guys and gals. This is the solid money. Hang in here with me because I got the juicy stuff coming. 50% real estate investment. That's $5,000. And again, we're going to invest $6,000 here. Okay. That's $250 per month for 2 years. That's a 7% growth, which is what we're estimating on our real estate. That's a good, solid investment, though. That's investment that you're not going to lose sleep over. All right. So that's going to increase your real estate by $11,789 because you're dripping this money in slowly over 2 years. Remember, $250 out over time. And then you're only going to earn $1,180 inside of those 2 years as well in fees from your Airbnb or whatever it is. Okay. The total value of your assets after 2 years is worth $13,150. Now, remember what I said, we're going to take 50% of our crypto profits and now we're going to put it into our real estate portfolio. Well, now that gives us $738,150. And that means you're earning $51,670 per year in passive income from a $22,000 investment. From a $22,000 investment. Now, remember, we have 3 more years to go. So we're going to actually make more money here. All right, more money. Now we're going to compound because I said we're going to compound that over 3 years. All right. We're going to take that $738,000 and we're going to turn that into $903,751. And now this is the point in time where we're going to start withdrawing money. Patience is a virtue here, guys and gals. But guess what? Now I have a solid, not up and down yo-yo, not like it's based off of this market or that market, solid $54,000 per year. And I only invested $22,000 in the crypto and in this. $22,000. That's the total that I invested. And we're not even accounting for your crypto portfolio. But here's the biggest thing. You have $903,000 just chilling there. You're going to sleep better at night. Now, if you have more money to invest, or maybe you're putting in $500 a month, maybe you're putting in $1,000 a month, you can do that, right? Now that increases by that multiple. So maybe instead of 54,000, you're making 100,000, 200,000. Mine is 300,000 per year from just my real estate alone. All right, just my real estate. That's my first threshold. Then I'm going to take it to the next level. All right, again, hang in here with me. This is not financial advice. This is just what me and my students are doing. All right, you've learned the 4 things that have ensured your success. Let's skip through these 4 things. So, what will you learn by being a part of our community? You're going to learn security. Number 1 thing, security. All right, you're going to learn how to onboard money from traditional finance. You're going to learn how to use the blockchain like we taught Mike. We're going to learn how to bridge between the different blockchains, because that's a skill in and of itself. We're going to learn how to use strategies like the ones you just learned to make money. You're going to learn how to yield farm, liquidity pool mine, and how to mine Bitcoin. You're going to learn what new narrative coins are for major upside returns. You're going to learn tokenization of real estate. You're going to learn how to get free airdrops, free money that I made like $44,000 from in the last 4 years. You're going to learn when we're taking profit and buying. You're going to learn new lessons every week. You're going to learn how to harness your mindset for maximum returns. We have like literally a mindset class. We have group learning available with workshops. We have one-on-one learning available, and much, much more that we're adding. We have a platform that we have. So let's chat. Click on that link below to set up a call and see what would be the best option for you. We want to make sure that we're a good fit for you. All right. No pressure. We're not going to pressure you. We just want to make sure that we are a good fit. We don't have a problem walking away with somebody we're not aligned with. All right. Because I don't want you to be coming and asking for a refund, because we have a 30-day money back guarantee. I want people who are in this to win it. All right. And we have various courses starting from $480 all the way up to $15,000 or $14,997. All right. So don't think you're out of this. We have payment plans as low as $400. All right. So even if you're like, oh man, I can't do this, we have payment plans for $400. All right. You could do this. Anybody can do this. If you want to just start with $480, you can start with that. You can do this. All right. There is no barrier to entry for you. And again, we have a 30-day money back guarantee. And let me share in a little secret. Some people have told me, yo, I want my money back. You know what we did? Here you go. Money back guarantee. No questions asked. Because if you're not in it, like I want success stories. And that doesn't mean anything bad on you. Maybe you just weren't aligned. You just weren't vibing with it. I get it. It's all good. All right. It's all good. So you can reserve your appointment now with one of our onboarding specialists. Okay. Hit that link, because we want to talk to you, and we fill up fast. And Mike's community has been wanting this for quite some time. So get on there, because we do fill up those appointments fast. Sometimes we go out like 2 weeks for appointments. All right. But I want to ask you a question before we bring Mike back on. Are you going to take the blue pill? For those of you who've seen The Matrix, you know this reference. And stay in your comfortable illusion of a life while the banking system and the Matrix melts around you? Or are you going to take the red pill and get out of your comfort zone while we show you another way to live life? It's going to take a little bit of time. Maybe some of you will get lucky. Maybe in 2 years, if you follow this blueprint, you'll get there faster. I don't know. But I know within like 5 years, we're going to get there. I know within 5 years, we're going to get there. But what I want to do is I want to show you really what the ugly world looks like to get you into that real state of freedom. The real state of freedom where you're like, no, I control my money. I control my time. I control my happiness, what I do with it. I control my finances. Anyways, guys, gals, thank you for your time. I know we went a little longer. But I do want to bring Mike back on. Mike, give us your alpha dog words of wisdom, my brother.
You got to invest in yourself. Excuse me. I'm a person that invests in myself, even at this level of my career, this stage of my career. Look, I make a good amount of money, right? I still have mentors. Swami is one of them. Tay Sweat is not another one, right? These are people that are in a lane, in a space. They know more than me, right? I know the benefits of getting under people like this to listen, just like I have, some of y'all might be some of my students, right? So all of the knowledge that I've accumulated over the years, all of the trial and error, my students don't have to deal with that. They can start right where the shit start getting sweet, right? Because I've already made those mistakes. So now I can curate the information and guide you in a proper way. Same thing here, or same thing with Ted, but with Swami here, listen, it's a fast track right to the front of the line, right? So that's what this is. Setup is the link. Somebody post a link. I want y'all to sign up for a call and fill it out. See if it's something that you want to do. Money back guarantee if you do proceed, right? But look, don't get in here and think that it's just going to magically appear for you. You got to do the work. You got to follow. You have to learn this stuff. This is not for everybody. I'm going to tell you right now. Most people in here will just listen to this information, be motivated for a little bit, going about your day, and your life will never change. That's fine, right? It's okay. I understand that that's a reality. I try to raise people's vibration and raise people's consciousness, right? So when I am going through my journey, my heroic journey through my life, and I uncover stones with wisdom, with different things, I always share it, right? Always share it. Okay? If there's something that enhances my life, look, my community gives me a great life, and I appreciate that, right? I give them a lot of value, so I'm always giving, and sharing things, right? I want nothing more than for more people, especially if I could be the reason that people have found a degree of sovereignty in their lives, right? Tapped into some financial freedom. They be like, yo, Mike did that. Mike put me onto this. That strokes my ego in such a way. You know what I'm saying? I'm going to keep it 100. I love that kind of shit, right? So we're trying to put y'all up on game. Take it, use it, plant these seeds now. You're going to be so much happier in the future, all right? Or don't. It's okay. But don't be those people complaining about things. Your life is not the way that you want it to be, but you're not doing the things to change your life. Hear me out. It's so simple. Life is literally what you make it. Literally. If y'all don't believe that, then that's cool. But if you understand that life is what you make it, make those decisions to better your life. Look, I always tell people that only good things happen to me because that's the reality of my life. I don't allow anything negative to happen to me, right? I wanted to be rich. I wanted to be successful, wealthy. So I made the decision to be that. It's a decision, okay? It's a series of decisions, making good decisions, right? Greatness, it exists outside of the normal margins of things, right? So when everybody else is just working their ass off at work, just doing a regular 9 to 5, you're hustling just to maintain, right? It's the people that's working outside of that, that's sitting and learning this kind of stuff right here at DeFi. This stuff is intimidating. I'm gonna keep it 100. I was intimidated sitting here trying to learn this shit, right? But I'm getting it. It takes time. You have to utilize your brain, things that a lot of people are not used to doing. But you have to get out of your comfort zone to reach some degrees of greatness, because the regular things that you're doing, you're just coasting. That's getting you nothing, right? There's no security in that, all right? Every time that I've had accelerators in my life is because I did extra shit, extra work. I planted extra seeds, all right? It's simple. I'm putting y'all up on game, all right? I want to see y'all in a few months with a robust portfolio, all right? I'm serious. This is a conversation that we all need to be having. This is the kind of information that we need to be embracing and acting upon. All right. It's crazy, man. This is a crazy time. This is a crazy time to be alive. Everybody can be wealthy, can be rich. How am I on here twice? That was weird. Somebody logged in as me. All right. Anyway, I got a clone. AI is cloning me. Right? That's good. So I'll be double times rich. Right? And I'm telling y'all something right now. This is crazy. My life is good. But I'm doing the things and making the decisions to make it better. That's why I'm here. That's why I flew to Panama. All right. That's why I invested my time and my money. Because I'm making decisions to make my life better. Better than my life is good already. It's great. It's fantastic. Now it's about to be yacht great, private jet great, all right? Private island great. That's my reality. What's yours? All right. So make sure the link, Matt, can you throw the link up? Let's get my people signed up. Get on these calls, and let's see what you got. See what we're working with. All right.
Yeah, just to close it out, Mike, I totally agree with you. I mean, I think like some people have dropped in this chat, like, so they said, I don't have $5,000. No, that was an example. Guys, gals, I've had people pay me $5,000 to train them, and they started off with $300. And during the bull market, when the market was hot, they were able to keep investing little by little, chip by chip. And they were making that $5,000 back within like 3 or 4 months. Now, I'm not saying that that's happening right now, but when the market turns around, man, you're going to sure be glad you got in. You're going to sure be glad that you got in. So definitely hit that link. Let's see you there. And guys, don't limit yourself. Like Mike said, don't limit yourself. I have so many people, I won't. Take that shitty word or shitty group of words out of your brain and let this be the time for you to really change your mind. It's what I had to do. I've had to do it multiple times in my life, and even like Mike says, I'm his mentor. Like Mike's my alpha mentor. All right. When he was out here, man, I grew in terms of like my confidence. He's got some magical powers. But that's what Mike does. My forte is teaching crypto, teaching blockchain, showing you how to become your own sovereign bank. So I'm gonna take like 2 questions here, Mike. If that's cool, and then we'll get off because I know it's getting late.
All right. Okay.
So somebody says, what about the government in Panama? They can take what they want at any time. How can we be sure that they won't mess with that market? They will not mess with that market. They cannot. That's the beautiful part about crypto. Again, it's decentralized, guys. They would have to go. Yeah, there you go. They'd have to like come to Mike's house like the Gestapo and literally take this out of his hands. All right. They can't just stop it. And that's why they're afraid of it.
Here's another thing. First of all, no one's taking nothing from me. Right?
Yeah.
Let's say someone get their hands on this. The code to get in here, you're not going to figure out, right? Yeah. Furthermore, we can burn tokens, burn that shit off. It's gone now. You know what I mean? Reassign it. This is what big banks fear. It's here. It's here.
Yep. Exactly. They are fearful. Let's see here. Best cold wallet to hold your assets on, Gene Miller. That's definitely a ledger. I mean, that's what like it's kind of cool. Like Mike has you can see here our ARC branded ledgers. That's my company. So it's pretty cool. If you're raising your hand, just type your question in the Q&A because I see everybody's raising their hand. And I don't know if maybe
right back.
Yeah, go for it, Mike. Go for it. Let's see here. How do I get a wallet? Do we have a link for our wallets, Matt? Maybe you have a link for our wallets to drop it in for the Jamel Benford. Cool name, by the way. Let's see. Great strategy, Marvin. Begin for you. Let's see. All right. Jamal. All right, Jamal. Like my name's Gven and people get it mixed up. So I appreciate the harder names. All right, cool. We got Kane got signed up. How many of you booked a call? How many of you taken the leap? I just want to know before I get off. All right, we got a few. All right. All right. Looks like 20 some of you, maybe more. All right, cool. Cool. Awesome. Awesome. All
Mike,
right.
you're muted.
Mike, you're muted.
It's probably best that what I said was muted, so it's cool. I was talking shit.
Nice.
Listen,
All right.
I don't want to hear, look, I don't want to hear no complaints. You know what I'm saying?
Yeah.
Listen, a complaint is such a pointless thing to do. People who have, earlier today, we spoke about a fixed mindset and a growth mindset, right? And here's the thing, I speak about these things often because for one to start to, walk into degrees of wealth and success, their mind state had to be calibrated in a certain way. Only certain types of people really become self-made, right? And it's 10 out of 10 is people with a growth mindset. A person with a growth mindset does not limit themselves on their possibilities, right? A person with a fixed mindset, nothing ever happens to them. Fixed mindset people complain, right? They'll look at people like us and say, oh, well, y'all are already like that. You probably got it handed down to you, whatever. You're too talented. You got a big following. They'll come up with all of the excuses in the world, right? I have very successful multi-million-dollar homies that have sold online businesses with very small social media followings, right? They're not limited by any of that, right? So, and one thing they don't do is complain. One thing you'll never hear me do is complain. If something's bothering me, I change my reality. I change the situation. All right. So same with y'all. You don't like where you're at. You don't like your situation. You change it. How do I change it? What's the situation that you don't like? Well, I'm not making enough money. Okay. Let's figure out. Here's one way right here you can make more money, right? If this is not your thing, go and do something else. But do something, right? Don't complain. You're complaining. You're annoying the hell out of your people, out of everybody, right? Nobody wants to hear that. You know what I'm saying? And there's really no reason to. We live in fucking 2023. It's literally the easiest time ever to make money. We're in the middle of a transference of wealth, right? Think about the richest man in the world. Fucking Elon Musk, a programmer, an engineer. It used to be bankers, fucking oil guys, oligarchs, shit like that. Now it's a guy with a robust, childlike imagination, just like us. You know what I'm saying? Things are shifting now. Be a part of this shit. It ain't just gonna fall on you. You gotta really fucking go and make it happen because you can. All right. There's no more fucking gatekeepers anymore, right? We're in a digital age. Embrace that shit. We're here. It's not the future, it's the right now. And right now, this is like, what was it called? Manifest Destiny, when people was making the rush to the West Coast in America for the gold rush, right? That shit was hard as fuck. But those people that made that initial fucking move, that initial investment of their time, their resources, they became rich. That was the first wealth outside of the obvious shit, right? In America, you know what I'm saying? People that made that journey out West, that shit was hard. That's what we're doing right now, but it's not even that hard. It's hard in the sense that you got to use your brain and learn this stuff. You got to invest your money and your time, right? But you should be investing your money anyway. You have to invest. Now, none one of y'all got 401ks. You know what I'm saying? None of y'all. So what do you think? You got to think you're going to get old one day. You know what I mean? Or your parents are going to get old. You want to do nice things for your parents or for your family. Anyway, I'm talking. Y'all know what's up. I want to see y'all make that next step, make that leap, get on these calls and step your shit up, right? Right now we're in a bear market. This is when you acquire assets. All right. In a few months, when it's raining cash on us, on the people that are acquiring assets, it's too late for you to start buying shit. It's gonna be mad expensive. Or you're gonna be buying shit from us, trying to get in late. You know what I'm saying? When Bitcoin is like $50,000 and whatever else is going on. All right. So right now is the time to get involved in all of this. So many ways, like Swami went through a lot of shit, a lot of information, right? I mean, you can be a bank. You can receive fees from people's transactions in these liquidity pools. It's fucking crazy, right? The bank's been taking advantage of y'all for a long time. Y'all ain't tired of that shit? I am. I stopped it. I have very little money in the bank. Fuck a bank. You know what I mean? I'm my own bank. All right. Anyway, we up out of here. Appreciate y'all. Thanks for y'all chiming in. Swami, I appreciate you, brother. I will continue to annoy you with all my questions. And I just want to understand this shit. All right. All right, y'all. We out of here.